Hi, everyone, and welcome to another edition of the Social Media in Finance Show. And today, I'm very pleased to have a very special guest join us for what is going to be the last show of 2021. So, I'm going to introduce him. Welcome to Ian Taylor, who is the Executive Director of Crypto UK, an association which I am a massive fan of as a fan of blockchain and all things digital assets and crypto. Welcome, Ian, to the show.
It's a pleasure to be here. Thanks for having me, James.
Ian, the reason why I wanted to get you on the show today was really to, and for those of you that don't obviously know Ian, it'd be great if you could kind of give a rough overview, but essentially your, or one of the big kind of missions of Crypto UK is, I suppose, in many ways, educate the broader financial services world, or just generally the general public, about the truly, I think, world-changing technology which blockchain is going to bring, not only to the world of finance, but pretty much everything. And I suppose your big mission is to help, I suppose, demystify some of the mysteries which are associated with blockchain technology. And that's kind of your big picture mission. And obviously, Crypto UK, you have a ton of amazing companies based in the UK, amazing blockchain-based companies which are really driving the next era of growth in UK economy. So, introduce yourself to the show and kind of give an overview of kind of who you are and what your mission is. I'm sure you do a better job than me.
Well, thank you, James. And yes, I think you covered off the sort of main objective of our trade body. As you said, with Crypto UK, I'm the executive director. I've been running the organisation for the last 2 years. We were founded in 2017, which was basically born out of the UK government's task force to understand crypto assets, which put a call out to the private sector. And out of that call out, our founding members, which include Coinbase, Ripple, eToro, CoinShares, and CoinFloor, formed the trade body. We're now 100 members. We're seeing a greater interest from institutional players joining our trade body. And as I'm sure your listeners will know, that any trade body, its objective is to advocate, and advocate part of that is education. And we're launching an all-party parliamentary group in Westminster that will go live in the new year. And with that, we intend for the first 100 days to really put a big effort on educating senior members of parliament as to this exciting technology, which is blockchain. And for us, we focus on crypto, which is the first real use case that we're seeing for this revolutionary technology.
Yeah, and it's been a tremendously exciting year for the space. And our background as an agency is obviously as a social media agency, traditionally focused in financial services. We've had massive exposure to and a massive thirst, I think, for knowledge from our clients from all of this space. And one of the principles we apply when we work with organizations is essentially the core process of digital transformation, which essentially consists of people, processes, and technology. So today, I thought it would be a really nice conversation to kind of go through these three, and I think focus particularly on the process part, because I think your history, obviously in investment banking, your experience in the financial services space, I think lends itself to really kind of digging deeper into this, one of the third pillars of this transformation. So what is your high level thesis on where we are now in terms of the space of crypto, blockchain, digital assets? Where are we now and where are we heading to in 2022 and beyond?
Yeah, so let's separate out the two. Blockchain is the general term for a decentralized ledger. All financial institutions have been running working groups and teams to understand if there's any benefit to their current infrastructure and processes. However, we haven't really seen any use cases because a lot of the time, a decentralized blockchain is not relevant for a financial institution. However, what we do see in other areas of the financial markets infrastructure is the benefits that blockchain can bring to, say, the amount of intermediaries that take place in the settlement chain. So whether that's execution, pre-funding, through to settlement, through to post-trade, through to central counterparty risk management, through to custody, through to post-trade settlement, all these different parts of the financial market infrastructure can be reduced by using blockchain, a shared ledger that everyone has access to, that is accurate and immutable. Um, However, it's not easy to build a blockchain, and there's quite a lot of political reasons why, and risk reasons, and cost reasons why that hasn't been implemented yet. People are trying to build solutions, and we know of digital bonds that have been born on a blockchain. There's some development in that space, but to come back to crypto, which, as I said, is the first real use case of blockchain. So blockchains are used as underlying technology, and out of that blockchain, a native token is created. And what we're seeing is one of the first use cases is, well, the use cases vary between jurisdictions. So in the West, the UK, Europe, and America, crypto assets are being used as an investment, as a new asset class, which offers an investor, a new diversified asset in their portfolio, which has fundamentally different properties to regular investment classes such as equities and bonds. But in other jurisdictions such as Asia, Thailand, for example, South Africa, Central America, and South America, crypto is actually being used as a means of payment, which is what Bitcoin, for example, was designed for: peer-to-peer, trustless, and payments network. Because everyone has a smartphone, and all you need is a connection to the internet, and you can have your wallet on your smartphone, and you can send and transfer and receive crypto assets relatively easily just by having an internet connection. So that use case is different to in the West. But to come back to sort of the process, regulation and adoption, these two areas are intrinsically linked. Especially if you look at the institutional adoption space, where we are seeing a greater amount of institutional involvement, whether banks be offering their clients access to digital assets and investment, or they're providing another service to crypto, such as custody. There's a number of banks that are providing custody of digital assets to their institutional clients. So the regulation, which we can dive into a little bit later, the clarity has been lacking, because this is largely an unregulated industry. But as we've seen adoption increase, both in retail and institutions, then we are seeing clarity from the government in the UK.
It's a really interesting dichotomy which you just presented, which I didn't really know as a relative newcomer to the space, that this kind of split between the use cases. You have the payments kind of use case, which I read, obviously, in places such as Africa as well. People using crypto seamlessly as a fantastic way to pay, almost bypassing the whole infrastructure, traditional infrastructure, which took so long to build in the West. And you're saying that in the West, what you're seeing is actually the use case more as an investment class over a payments. Do you think that is something which is going to become, more ostracized and separated as time goes on, or do you think there's going to be kind of a melding of both use cases globally, or do you think there's going to be an inherent difference between use cases as time kind of progresses?
It's a good question. I think we need to focus on the societal benefits that these peer-to-peer trustless networks provide, that have no borders, and you don't need to have a banking relationship to be able to send value. And we know that there's a large proportion of the world is unbanked or underbanked. So that's a really good story, and crypto addresses that. However, what we do then see is criminals taking advantage of weak areas of transferring value, through money laundering, terrorist finance, ransomware, where there isn't any customer due diligence. So KYC, know your customer, anti-money laundering regulations is one of the first focuses of policymakers to address this gap. So it's a balance between protecting against economic harm and illicit finance, but still allowing the innovation to provide these societal benefits that I mentioned.
Yeah, and that's one of the things which we've had Lawrence Wiseman obviously speaking at some of our events, and obviously Lawrence really well, and he's actually how I met you, Ian, was through Lawrence. But he spoke about in our social media and finance events as social media was picking up as a genuinely important tool for marketing communications. He spoke about this kind of misconception that compliance is there to kind of scupper any kind of evolution in technology in the business process. And he said that actually no, what we're trying to do is, the earlier we hear about these innovations, the earlier we're brought in, the more we can help shape the change. When it comes to this technology, I suppose my question to you is, and I'm kind of moving in a bit closer, to the UK specifically. What is kind of the key kind of, and you kind of touched on it, like where is the bottleneck in terms of this legislation, which is preventing the true, I suppose, total immersement with this kind of technology across the whole of the financial services space? Well, I'm sure there are many, but be keen to hear kind of what your key kind of roadblocks are.
Yeah, well, so the big hurdles that we face, and it's no different with any new piece of regulation, especially for an industry that hasn't been regulated before. So the challenges that we hear from the FCA is quite a lot of organisations that now have to conduct anti-money laundering process and procedures. This is crypto asset service companies in the UK have to do the same due diligence and reporting that financial institutions have to do, is that they haven't done this before and they're perhaps not well equipped or have the right skills and senior management to be able to reach the high bar that the FCA has put in place. But also on the flip side of that, we see um, issues with the regulator around the internal perception of crypto is high risk for these type of crimes, money laundering, for example, where HMT, Her Majesty's Treasury, which writes the regulation and has the power to do so, where the FCA just enforces it, do not see crypto as a high risk. They actually see it in the National Crime Report. The latest iteration was September last year. They see it as a medium risk. So we have a bit of a friction there. Not to mention that we've seen a bit of a brain drain in the FCA of people within the regulator that understand the technology, understand the different business models, and leaving and joining the private sector. And also, perhaps from the top, there isn't, a perception that we should be working to develop innovation in the UK.
And that point you made is I was going to touch on it because we've had the same a couple of years ago. Well, we still do have this massive problem when it comes to social media communications with essentially the outdated policy towards social media and how it's incredibly frustrating in an age in which financial communication education is changing and there's a whole new generation of investors who look to social media, who consume content through social media, who will take information through social media and actively use that to invest. When you have regulation which essentially strangles the most credible voices to have those exact conversations with millennials and young generations, what you have is a vacuum in which the people that fill that vacuum are nefarious actors who don't really care about policy, these kind of legislative rules. So you have a whole generation of investors on YouTube, investors or YouTube specialists who are essentially scamming people because there is that knowledge vacuum, and that vacuum comes because the policies itself are not adapting to the technology from a social media perspective to the age. Is that happening from your side of things, or is it a kind of a different problem which is emerging?
Well, one big issue that we're seeing right now, and this is very relevant today, is promotions of crypto asset products and services. This isn't regulated yet in the UK. However, there is a consultation that closed earlier last year, so expect some policy to come out from the government making all crypto asset promotions on whatever channel fall into the financial promotions order. But we've seen recently the ASA, the Advertising Standards Authority, are asking our members to take down their advertising on social media, on YouTube, on posters. And what we're hearing is the guidance is just not there. There's no clarity. They're moving the goalposts. And one real interesting example is we've heard on multiple occasions that the ASA has told our members that they must remove their promotions because they're not talking about taxation. And that is a higher lift than any other financial promotion. And it just doesn't make sense because every individual's taxation liability is fundamentally different. So it just doesn't make sense to put that into an advert.
Yeah, and it is a massive problem because I think social media is, and again, it's interesting how almost these technologies are almost interplaying with each other because you have a scenario now where you have this massive decentralization of information, and it's not as easy now to be fair to the regulators. It does present a massive challenge, and you touched on the brain drain and kind of suppose that kind of I suppose education gap. Is that a priority for Crypto UK? So I suppose at least facilitate that information exchange to help the regulators in the absence of the right people internally to make that? Is that kind of one of the initiatives which you're pursuing?
Yes, it is. And we have a monthly check in with the FCA and their crypto asset specialist team, and we offer support to them in any shape or form, whether that's training, whether that's discussions on ransomware that we just presented to the G7 earlier this week to provide education as to what we can do as an industry to help government and law enforcement to to solve some of these issues. But there's a lot more work we can do as a trade body. A trade body is not just there to advocate and lobby and educate; it's also there to deal with these issues, address these issues, and work with everyone, all the relevant stakeholders. So we're developing our own set of training tools, whether it be focused on compliance, because as I said, quite a lot of crypto native companies don't know how to build out policy and procedure to protect against anti-money laundering, general awareness to the public, so to protect against fraud and scams. Naturally, as we live our lives more online, we're seeing people being defrauded, and crypto falls into that category, unfortunately. But also some technical training as well, so specifically around DeFi and NFTs for people that are interested in that. So yeah, these are all work streams we have in play right now.
So you're a very busy man.
Indeed.
So moving on, I suppose more to the UK specifically, because I suppose that's obviously one of the big drivers is I think when you spoke at Smith last well this year actually, you used a metaphor that crypto in the space, the general space is in its adolescence. So you kind of had this kind of sort of this childhood, in the last few years, and now you're in the adolescence where it's kind of everyone's starting to establish their identity. Where do you see the UK as a player in this new space? Obviously, we had a really successful fintech wave about 10 or 12 years ago. You had some amazing unicorns emerge from UK PLC. Do you see, or is that something which you think is realistic for UK? And if so, is that kind of one of your priorities as well, to try and I suppose engineer that sector as an area of growth for our economy moving forwards?
Yeah, for sure. Naturally, we're focused on UK, but we work with other trade bodies overseas and other agencies because crypto is global in nature. But the UK has a rich pedigree when it comes to financial services with the City of London, plus also fintech. The good work that's been done in the last 5 years with the Sandbox and Innovate Finance, who we work closely with, another trade body focusing on fintechs. And you could argue that blockchain and crypto is a subset of financial technology. Um, and I'll give you some statistics. And unfortunately, our industry doesn't have a great amount of statistics at this time. That's another thing we're working on, creating research and thought leadership pieces. But the FCA conducted their summer research report on public awareness on crypto assets, and they said this had risen in 2021 versus 2020. They say 78% of adults in the UK have now heard of crypto. So that was up from 73% last year. And in terms of ownership, the FCA estimated from their sample size that consumers holding crypto assets in the UK had risen to 2.3 million, up from 1.9 million, or a total of 4.5% of adults in the UK. That was in summer. I honestly think that number has increased significantly. In the UK, what we also do is we work with other government departments, many government departments, one being Department of International Trade, to help them understand, to help their clients who are overseas companies looking to set up business in the UK, understand what's the friction, what's the regulatory clarity. If I want to set up in the UK, because generally they do, for this reason I mentioned. Fintech, we have good rule of law, we have good tax clarity, we're a stable economy, etc., etc., etc. And there's a vast amount of resource when it comes to developers here in the UK, which is really useful in this innovative industry. Is to support that. We have a lot of these calls, so we know that there's a lot of development in the UK. There's a lot of interest in the UK, so it's vitally important that we as a community get together, have a joined up voice to really work with policymakers to ensure we don't overregulate and thus scare people off, because we do hear from the lawyers that there's quite a lot of jurisdictional shopping going on with crypto asset businesses.
Yeah, and that brings me on to I think I agree with you from my side, from the marketing communications side. Social media finance as an event traditionally, and we're noticing this as well actually. So our events called social media finance. I and obviously all the team are working out: does this become finance, or is this adjacent to finance, or is it going to is it going to become a new thing? And you said kind of, I think you had the same kind of, I suppose you're postulating the same thing initially. So do you imagine, is this going to become, because some obviously people are saying, oh, I know this is going to be the new financial system, which is going to kind of run adjacent, or do you think that actually there's just going to be almost a consumption of this technology into traditional finance sector? It'd be useful because we call our conference social media finance, but we're doing a ton of conversations around the very topics you've spoken about. So it's a really interesting question. I'm wondering what your thoughts are on that.
Gosh, yeah. What will the future look like? I've got many views on this. I'll try to distill it into a short summary. Some people argue that when the institutions start getting involved in, and that the levy has broken, they are here. There is mass adoption. They want all the goodies that they used to. So the financial market infrastructure that I spoke about, they want to see credit risk mitigated through central depositories, CSDs. They want to see regulated custody. They want to see compliant liquidity, make sure it doesn't come from a country on the blacklist or sanctioned jurisdiction, which makes sense because they're highly regulated. But there is a risk that the benefits of the technology, one being a blockchain can settle, well, being Bitcoin's example, other blockchains can settle faster, is approximately 10 minutes for the block to be appended to the last block. Thus, settlement is almost instantaneous, whereas in traditional markets, it takes 2 days to settle an FX transaction. So those benefits, we're at risk of losing them because the institutions want what they want. But then again, you could also argue that when the institution adoption really develops, with that brings a heck of a lot more innovation and a heck of a lot more development. So that's a positive. And then what we do see in the decentralized land with decentralized autonomous organizations, decentralized finance, which is the first sort of real um, subset of crypto, which is decentral, but it doesn't have to be finance. Finance is the first use case. You could have decentralized social media, right? Where the community runs a platform such as Facebook or Twitter. And there are projects developing that. And perhaps there'll be a two-tier system where we do have the highly regulated institutional space, and that's doing its thing. But then we have some folks that in the retail section are using, these decentralized applications to live their lives away from the centralized applications that we know and love today.
And I suppose that goes to my more specific question, this wasn't in the original notes, but what technology, what blockchain, what layer one do you feel most excited about in terms of that? Do you think Ethereum has the stranglehold over, especially a DeFi space, or do you think it's too early to tell and it's still, all bets are off as to kind of where these institutional, I suppose, this institutional wave will kind of adopt and flood to?
Ethereum is the biggest and oldest layer one protocol where more has a bigger community, so more people are developing, and it has it has benefits that other blockchains don't have in terms of security, for example. But it does have the problem that it's still proof of work, so it consumes a lot of energy. However, Ethereum 2.0 moves to a proof of stake consensus mechanism, which addresses that. But then we've seen a massive amount of growth in Solana, Cardano, Polkadot, Avalanche in the last 6 months, where they're really developing their communities. And developers and builders are getting involved in these projects, and these projects offer additional benefits, and it's always a trade-off. Is it TPS, transaction processing speed, versus the security, versus the amount of decentralization that exists on these chains. There's no perfect decentralization. Even Bitcoin, which is probably the most decentralized blockchain, does have a handful of miners that are controlling the network and providing the security to network. But we see on there's always different use cases for these different blockchains. But why can't we see a world where we have many of them, and some of them are more focused on payments, for example? So the I think it's the Algorand blockchain is focused more on cross-border settlements. So it's that will be perhaps the chain that's used for peer-to-peer payments in these developing worlds.
Yeah, so essentially what you're saying is some people might value decentralization, so they'll go for that particular blockchain. Some people might value, speed, they go to other blockchains. So there's not going to be one blockchain for all. You're saying that this market essentially there's not going to be a monopoly. You don't imagine a natural monopoly emerging in terms of technology, which tends to happen. You look at social media, you have Facebook, for example, which monopolize essentially a great deal of the social media space. You're thinking that there's going to be several layer ones, and people are going to be able to pick the layer one which most relevant to them. And you also mentioned that actually retail might find more use in other layer ones, and you might have this institutional block which uses a different blockchain. So it sounds like you're quite, I suppose, your vision for the future is quite a free market dream in many ways.
Well, I hope so. My philosophies are based around the free market. Competition is good. I don't like centralization. I don't like control. I don't like how much power Facebook has and whether it rules the world in the metaverse that we'll be living in. I don't necessarily like these names. Web 3.0 isn't a particularly good name, but
Okay.
perhaps we can come up with a way to rename how our lives will be fundamentally different as we live them more online, and all of our payments are digital, and quite a lot of our working will be completely digital. And what blockchains do and crypto do is provide the ability to transfer value, you know, at any time of the day to anyone in the world at the speed of light.
Yeah, I agree with you. I think there is this consensus. I think even I mean what was the main appeal for me personally getting into this technology was the decentralized element of it. I think that's really a powerful part of the appeal. Some of the blockchains you mentioned arguably aren't that decentralized, but what they lack in decentralization, they make up for in other things you mentioned, speed and stuff. So, do you think do you think decentralization is going to continue to be the north star for the space, or do you actually think that the future actually is it's not really going to matter as much whether a blockchain is truly decentralized? Because my hunch is and my hope is that decentralization always remains one of the most important principles. But it sounds like actually what you're saying is that that may not be the case, dependent on the use case of the individuals and businesses that want to use the blockchain.
The benefits of decentralization are clear for everyone to see, but it's that chicken and egg. How do you bootstrap a network? There has to be some form of centralization. When you talk about layer two or decentralized apps, some of the big operators in the decentralized finance world, such as Compound, Uniswap, they start off centralized, and then it's up to the developers how much they then hand over control to the community. The forming of a DAO, and that the question of how to run a DAO comes up against many frictions as well as to how much autonomy do we give to the community, and what decisions do we give the community to make. Should we allow the community to make decisions on price changes in our protocol, which is a relatively small feature, or should we allow the protocol the community to change a really big decision on the protocol, which is how how we actually which tokens we allowed onto the platform, who we allowed to vote. And so what we're seeing is a huge amount of discussion, development, and developing in real time as to how these decentralized autonomous organizations work and how community runs a platform, or what level of decentralization works. But it's all up for grabs right now. But what we do need to be mindful of is the protecting it against the harms is making sure that these platforms aren't used by criminals, and the industry could do a lot more in regards to to addressing that right now.
Yeah, and I suppose that leads on to my final, I suppose, question of this interview is and you have touched on it, kind of next year, the years ahead. Well, actually, firstly, before we go into that, the key wins for you. Obviously, this year has been a really interesting year for the space. But what stood out for you as a massive win? A really positive step, looking at the UK space. And yeah, can you take out what was a big kind of win for you, and then moving forward, the second question is going to be, what do we look out for in 2022 from your perspective? What's kind of the key things which are going to emerge as an important thing to watch out for? So there's two questions to that.
Yeah, so from the win perspective, I'll just sort of focus on the trade body Crypto UK, and how we've increased our membership from we've doubled it basically this year, so we're at 100 members now. We're now recognised by the regulator in the UK, the FCA, as a competent authority. We get invited to a lot of government law enforcement sessions, which is really good. So that's part of the advocacy and education piece. And the other question was around where do I see the industry in 1 year?
How about we do 1 year and then 5 years?
It's hard. It's hard to it's hard to have a crystal ball for 1 year. I keep asking people myself that I interview on panels and so on and so forth, but we generally settle on a 5 year horizon. Is slightly easier. Yeah, I think we'll see quite a lot of the adoption of some of the models and technology used in crypto play out through our traditional finance. So to bring it back to finance, so for example, decentralized exchanges use liquidity pools and automating market makers, rather than central exchanges use actual banks to provide the liquidity through market making. And so with that, there's a whole host of benefits that AMMs, automatic market makers, bring in terms of slippage and no centralized control and price manipulation, etc., etc. So yeah, I do see a lot of institutions talking to our members and looking into this new industry. So in 5 years' time, I hope that we have all of these layer one protocols running side by side, and we don't get consolidation. So my 5 year horizon would be, that they're evolved. We've addressed some of these issues that we see now around losing funds and hacks, for example, smart contracts falling over, and then adoption in the institutional space, and retail involvement, and also more decentralized offerings and dApps than just finance.
And hopefully, Crypto UK will have 10,000 members.
I hope we could do a lot more with that kind of resource.
Well, hopefully this helps. And actually, we're really excited at Social Tree to be partnering with Crypto UK for social media finance next year. And obviously, social media finance is primarily a gathering slightly outside of your usual community, and it's in the community marketing professionals. But I think that the value you bring to people like me, who's a bit of a layman, really, when it comes to technology, I think is a massive utility in marketing and communications professionals understanding this space. Because if you're in financial services, my hunch is, and as me, obviously, as an agency, is running an agency but specialised in financial services, is this is going to be a big part of our future. So we need to know about it. So Crypto UK are going to be partnering with us for the event. It's going to be an online event, and it's going to be a dinner as well in Banking Hall. So really nice venue in the traditional square mile. It's going to be a nice dinner. It's going to be an event. There's going to be a VR experience as well. And you'll be speaking, Ian. If you didn't know that, you are now. I've invited you to speak, but I spoke to your team members and speaking June 22nd. So really excited to have you speaking at the event. Looking forward to hopefully this year, touch wood, actually meeting many people for the first time in June 2022. So I'm keeping my fingers crossed that we can actually have a face-to-face event next year.
What a novelty that would be. But look forward to the event. Thanks for involving us.
Yeah, and thank you so much, Ian, for speaking. And as always, it's really fascinating. And we'll put some information about how members can join So, how do people join? Is there a criteria to join? Like, what's the process?
Yeah, the onboarding is relatively straightforward. You don't have to be a crypto asset business. You don't have to be based in the UK. If you just email us at hello@cryptouk.io, and we can get in touch, and our member services guys can send you some literature and spin up a call if necessary, and we can walk through the process.
Excellent. Well, thanks so much, Ian, for taking time to speak today. And I hope you have a one for us today. And we'll be catching up very soon.